Uganda's pension sector is increasingly looking towards the real estate industry as part of efforts to diversify its investment portfolio. The discussions were held during a precursor conference ahead of the fourth Alternative Investment Conference slated for July under the theme Investment Readiness for Pension Funds.
What we have seen in Botswana, what we have seen in Zambia, what we have seen in South Africa, that if you understand real estate but also understand your captive market, you can generate returns of up to 20% if you understand who you are doing this real estate for.
Before it was put up a building, that's it. Put up a building, that's it. But today, understanding who you are and you bring the uniqueness allows for better understanding of risk.
Organized by the Certified Financial Analysts Society of East Africa, CFA, the meeting attracted key stakeholders in Uganda's pension sector, including the regulator and investment professionals. Participants examined project design models, risk assessment mechanisms, and expected returns on investments aimed at protecting savers' funds. According to the Uganda Retirement Benefits Regulatory Authority, UBRA, the meeting comes at a time when government interest is growing in utilizing locally sourced funds to finance capital-intensive infrastructure projects, including investment in the real estate sector.
What is coming out strongly? What should be involved in structuring that kind of investment vehicle? And what is also coming out strongly is making assurance that members' money is protected and is invested well. So it's not an issue of just waking up and dream of a project and then put members' funds. No, that's not what it is. What are the number of projects that we think we are going to have? The housing is one of them. Infrastructure, schools, hospitals, and roads are also another. The biggest driver is that that project must have a liquidity to the scheme and it must be profitable. We are not looking at projects that are going to be white elephants, not generating any revenues to the scheme.
Investment experts emphasized that successful real estate investment requires proper structuring, strong governance systems, and a clear understanding of regulatory frameworks to guarantee sustainable returns.
Now, to say that government has zero risk is quite risky as a statement because anything could happen within a sovereign, and therefore to build an economy, to build a nation, to build a base of an economy, there is need to diversify our investment options such that the pension assets that exist can build directly into the development of that economy. Now, infrastructure in itself opens up the nation to other areas of development. It forms the underbelly of additional economic development.
Dennis Igoa for UBC.